Hi everyone, here's your market update for Wednesday, November the 4th. As we head into the middle of the trading session, the day after the US presidential election, markets are surging. Here are some of the numbers. Dow Jones Industrial Average up over 600 points. At one point it was over 700 points today, or 2.35%. S&P 500 up 3%. NASDAQ Composite up 4%. Oil is up 3.8%. And interestingly, Bitcoin up 2.5%. which is also up 33% since the beginning of October. Notable companies within the S&P 500 whose share prices are surging today include Facebook up 8%, Eli Lilly up 15%, Bristol Myers Squibb up 7.5%, and interesting also, Uber up 12% and Lyft up 9%. The reason that drug companies and healthcare stocks are going higher is the probability that the status quo will continue, which means simply more profits with continued high drug prices. Now, on the Uber Lyft front, they are in double-digit returns because of a special ballot measure that was on the voter card for Californians. Specifically, Proposition number 22 asked, should app-based transportation and delivery companies be exempt from providing employees benefits to certain drivers? Basically, are these contractors, part of the gig economy, or are these employees? Interesting, nearly 60% of the votes in California are in favor of this exemption. I find it kind of ironic that the most populated state of progressive voters would deny app-based drivers from benefits such as healthcare. Why? Simple. Agreeing to these measures would result in one of two outcomes. A, Uber and Lyft would simply shut down their services altogether, thereby inconveniencing Californians from having the service in the first place. Or B, these services would remain in place, but the cost for a fare would increase substantially. I guess it goes to show you that socialism feels really great until it either starts to inconvenience you or takes you to a place where you got to have more money coming out of your pocket. Now let's go back to the markets for a moment. Over the last few weeks, financial experts were predicting that what the market needed to see more than anything else was certainty over who the president was going to be. That if we had certainty, the market could have a nice rally, and uncertainty could result in a market fallout. But what we're experiencing right now is in fact the exact opposite. So the big question is why? Here's my take. Market movement in the short term is driven by headline news, trends, and sentiment. Long term, the market moves with the economy, but short term, there's all sorts of reasons that the market moves up and down. In the days leading up to this election, the mainstream media was constantly referring to what was called a blue wave effect that could take place. What this meant is that the Democratic Party would not only win the presidential election, but also take both chambers of the US Congress, being the House of Representatives and the Senate. Under this scenario, a future President Joe Biden would have unfettered power to increase taxes and government spending. Both of these events would be viewed as a drag on corporate profitability. As we head into the final stretch of the ballot count, it appears that the Republican Party will continue to maintain control of the Senate, which is the upper chamber of the US Congress. By doing so, the Republican Party will have the ability to stop or significantly modify any tax increases or government spending for at least the next 2 years until the midterm elections. So in summary, the market, at least today, likes the idea of a balance of power in the White House, regardless of whether it is second term for President Trump or a new administration under current Vice President Joe Biden. Thanks for tuning in. We'll have more for you as events unfold.